Welcome. News of the Money World. Rupert Carline, Kora Kiwi Saber, Darcy Ungaro. How are you, everybody? All good? Thank you for joining us, and welcome, Rupert. How are you?
Hi, Darcy. How are you this morning?
Very good this morning. And we had some good news coming out of the US yesterday. We're going to talk about that. We're going to talk about what happened here last week, and then we're going to zoom in on some other matters. And we're just going to get stuck straight into it, shall we?
Yeah, definitely. Sounds good.
All right. So the U.S. debt ceiling. Let's start there. That was in the media. It kind of does this every few years. And when I was doing a little bit of research, I found out that actually not that long ago this conversation was happening, and it just keeps on happening. So, do you want to take us back in time, Rupert, where this U.S.
Yeah,
debt ceiling comes
sure.
from?
So, look, but it's probably worth going all the way back to the start of time, right? So,
Okay.
back in this was the US debt ceiling got introduced back in World War One. Prior to this, every time the Treasury wanted to go and issue bonds, they needed to go and get permission from Congress. So, Congress used to approve every single issuance of debt. And then, because this was happening a huge amount through the financing of World War One, the Congress turned around and said, "Hold on a sec, this is nuts. You're coming at us every kind of couple of weeks. Why don't we just say, hey, look, you can issue as much as you like, up to a certain limit." Everyone thought that's cool. That's the problem that's just gone away. And then it didn't really start rearing its head again until the 1980s, when all of a sudden they'd start hitting the limits because government spending kept on increasing. There's an inflation factor as well. Debt kept on growing. And actually, it was kind of all of a sudden people thought, oh, hold on a sec, we're going to start hitting these limits. And it wasn't really until the very first big debt fight was in 1995 under the Clinton administration. And unfortunately, what you see, so the first big one was 95. The next massive one was 2011, where it literally came down to the wire and federal employees were not actually paid for a couple of days during that period. But it's just a constant kind of thing that keeps on cropping up. And that's because fundamentally the Treasury are only allowed to have so many Treasury notes outstanding at any point in time. And it's a little bit of a weird rule.
Yeah, can you actually explain that to me? Because I kind of understand the debt ceiling is like a revolving line of credit limit, if you like, where just a credit card limit, if that's easier to understand. And sometimes our revenue isn't sufficient to cover our outgoings, and so we
Yep.
need a little bit more credit for times until things stabilize. But with the treasury bills that you just mentioned, can you explain that a little bit more?
Well, effectively, the US government funds themselves through Treasury bills. So the US Treasury bills are same with New Zealand government debt. A company might have a funding mix which is made up of bank debt, of commercial paper, of bonds. Government debt is effectively all put out to market in the form of treasuries. And so what this US debt ceiling does is it says you are only allowed to have so many treasuries outstanding or so much debt outstanding at any point in time. And so the problem you have is if they any treasuries that are issued that take it above that limit, what that means is that there's kind of a lot of questionability and contention around whether those treasuries would be legal tender or not. So as a buyer of those treasuries, I'm sitting there going, oh, I'm not sure I want to buy it because I'm not sure that this is a legal instrument and I'm not sure the government was allowed to issue this. And so maybe I don't get paid.
Hmm. Okay. Okay. So, and the whole politicization of this is where it kind of, I guess, takes another
Yeah.
level, right? And if we imagine a
Yeah.
household where mom and dad are in charge of the purse strings,
Yeah.
you don't want to have the kids actually making decisions with the money. But is that why we have, obviously, it's a leading question. That's kind of why we have a separation between the the money making or the money arm and
Yeah.
the guidance arm, right? Like leadership and where the money comes from, two different
So
things.
American politics it's a bit of a weird state in American politics, but it's based on separation of powers. It's kind of all made to make sure that no one has full control on anything. So you have the three branches. You have the executive, and that's effectively the president and the president and his cabinet, of which Secretary Yellen is the Treasury Secretary. And their role is to kind of manage the day-to-day running of the country. And then after that, you've got the I've forgotten the second name, sorry, but it's
Legislature,
the legislator,
executive
sorry,
legislature. Yep.
the legislator branch, and that's Congress, and that's the US Senate. Again, you've got their role. So Congress's role is to control the finances. So any budgets that the executive branch put up need to be approved by Congress and also by the Senate. And any debt, anything like that, this all has to be approved by Congress. And then, of course, you've got the judiciary, which is the Supreme Court. And the idea being that between those three branches, power is never concentrated into a single branch, and they hold checks and balances on each and every one of them. The issue, that's great in theory. The issue that you end up with, though, is that you have the two branches that are controllable. So you've got the legislature, which in this case is Congress, and the executive being controlled by separate parties. And so the US presidency, Joe Biden, he's a Democrat, and you have the Congress, which is currently controlled by the Republicans. And so I think how this is all relevant for the debt crisis is you have two parties that both agree fundamentally that the US debt is too high, that they need to rein in and they need to do a better job at kind of managing the debt levels, because otherwise it's going to cause a massive issue for future generations.
Mm-hmm.
The issue that we have, though, is that you've got a Republican Party who are adamant that it needs to be through deep, severe cuts to spending. And by the way, you're not allowed to touch defence spending, which makes up a significant chunk of government spending. And so you kind of end up with a world of they've got to make cuts to welfare, they've got to make cuts to education, healthcare, all of those things, which are all really, really core to democratic ideals and democratic hearts. The Democrats on the other side sit there and go, well, look, we think the best way to achieve this is to increase taxes. So fundamentally, we don't bring in enough tax at the moment to achieve the objectives of what our people have told us they want from a government. And so therefore what they need to do is we need to increase taxes. So little things, right? Like they're arguing for a reversal of the Trump tax cuts, which got brought in 2017, which added a significant amount to the debt. And so generally, this is just the constant conversation. A Republican president comes in, when they've got control of the legislature, they enact tax cuts. That happened under Bush. It happened under both Bushes. It happened. And so the fight was then with Clinton. How do they unwind some of the Bush senior tax cuts? Under Obama, how do we unwind some of the Bush junior tax cuts? And to be fair, now we're in Biden territory, and they're sitting there going, how do we unwind some of the Trump tax cuts? And of course, Republicans are just sitting there going, no way, no how. You guys need to figure out how to spend a whole lot less.
It's so weird, but you can see that play out in any country, right? Like even in New Zealand, it's something that we've been digging into lately on the podcast around tax. And if you had a really simple analogy of a household where there's a stay-at-home person and someone who's going to work, there's always going to be tension between those two people saying, you need to contribute more to this, you need to contribute more to this. And this is the person from the household speaking, but the person that's going out there in the big wide world and actually making the money probably kind of sometimes feels a little bit like they're doing the heavy lifting and they don't get hurt, and they're already doing as much as they possibly can. So everyone's kind of feeling the pressure and the strain. And meanwhile, when you think about this in terms of our political parties, they're really just doing what we've told them to do. So they think that they're acting according to our wishes, but we sometimes don't really appreciate that our wishes have consequences, and there is no government spending. It's taxpayer spending. It's us that's spending the money, but it's quite easy to forget about that. And in the US, we've got more of a picture of how those tensions are realized. But I guess what I would be wondering here, it looks like crisis was averted again here over the weekend. President Biden and Speaker Kevin McCarthy on Saturday reached an agreement in principle to lift the debt limit for 2 years while cutting and capping some government spending over the same period. So what do you think? Do you think that we're all good for now, or do you think there's on coming up?
Well, look, we hope so. But I think the one thing that needs to be remembered is the Republican Party is nowhere near as as well behaved as potentially they once were. I can't quite figure out the right word. So, and I think that's the big nervousness is actually, can they get this through Congress? Because at the end of the day, Ken McCarthy, he won the speakership, so basically elected to control Congress. It only took 14 votes to get him there. And then he got there through a very, very, very slim majority, very, very slim vote as well. And I think what no one really understands and what people are really worried about is, are the hardliners going to hold course? Are they actually going to vote in favour of this? Because there are a number of people that believe that actually that their causes and the country's causes are better off by letting catastrophe happen rather than reverting it. And I think that's the bit that we're not quite sure of at the moment. I mean, back in 2011, we had the Tea Party. They were pretty extremists. But today, the level of dysfunction that sits within that Republican Party, I think you couldn't bet either way. I mean, getting an agreement between McCarthy and Biden, that was a really important step. But there's no way that that's a done deal.
Yeah. Well, there's dysfunction everywhere, man. There's plenty of dysfunction. But I guess I know what you're saying, though. It's almost like, will they do it this time just to prove a point that they do have some influence to send a message, right? That we need change, we want change, and we're willing to sacrifice stability, because this would have a massive impact, wouldn't it? Like if the US defaulted
Massive.
on its debt, that's not just a US problem, and this is why I'm interested in it. Like what happens if the US did default?
So actually, what you've just said, sorry, I'll answer that question in a second,
Sure.
but what are we, so today we're 30 May, Tuesday, 30 May. I'm going to put a bet down and say, because Janet Yellen came out last night and said they've got till the 5th of June, I think it gets knocked back and fails its first attempt at a vote, because fundamentally, I don't think they will pass anything until the 4th of June or the 5th, potentially. They've gone a little bit too early here. So personally, I think it probably will. It will get there, but it's got one more big hurdle to get through first. So what happens if they fail? So, and what happens if they do default? Well, effectively what that means is Treasury can't make the payments they need to make. Every day they're making billions of dollars of payments, whether that be to social welfare recipients, whether that be paying federal employees, which includes things like the FBI, Army, politicians. They're paying for infrastructure spending, so they're paying the likes of Lockheed Martin to go and build out the new F-18 fighter jets. And then the other piece that's really important also is they're also paying, they're redeeming Treasury bonds almost every day. And so each and every day they've got all these payments. And if they can't issue new bonds, effectively what that means is some of those payments will have to be stopped. And because most of those other things are, you can't really not pay welfare payments and put them off, because people won't eat, people can't live. You can't not pay federal salaries for a couple of days, because again, people need to eat, people need to live. And so I think that the thinking, which no one's quite sure on, is probably what it means is that they can't go and redeem treasuries. And so that means I own a bond that's kind of meant to be repaid in the next 4 or 5 days. And I'm expecting to get my $1 million back, and I don't get it. Instead, the government said, oh, we're still working through this. Hopefully we'll be able to pay you in the next couple of days.
Yeah. And let me pause you there, because that's really important for people to get. Like when we're talking about not being able to redeem treasury bonds, and maybe you can correct me if I'm wrong with this analogy, Rupert, but it would be the equivalent of, say, having a mortgage which is fixed for 2 years, and then when 2 years rolls around, it's not naturally implied that you can keep the money. You actually have to pay it back this time around, right? Is that kind of like another picture of what that looks like at a different level?
Yeah, exactly. That's exactly what it is. So I've got a bullet mortgage, and I need to pay that back in 2 years. And I say, sorry guys, I can't pay that back in 2 years' time. The issue though is that, Darcy, you've been kind enough to lend me that money for 2 years. And what I've done is I've gone and borrowed money, or sorry, you've gone and borrowed money to lend to me. And you've got a whole lot of financial obligations and a whole lot of payments that are due on the day that I pay you or the day after I pay you. And so all of a sudden, because I haven't paid you, you now can't make any of these payments. And so you start off in this really, and I think that's what makes people really scared, is you potentially end up in this ripple effect of going, and this is particularly acute in the financial system. I'm
Mm.
JP Morgan. I've got, I don't know, I might have a couple of $1 billion that I owe to me by Treasury tomorrow. And all of a sudden, so that couple of $1 billion, I'm also relying on that to kind of pay these people over here, these people over here. All of a sudden, I can't pay my debt holders. I can't pay anyone else. And it's a really, I think the ripple effect of what potentially happens and what flows next, that's what's scaring everyone.
Yeah. Yeah, I agree. And we normally would consider debt to the government as a risk-free return, right? And
Exactly.
does that change things? I guess would be my next question, because now all of a sudden, because of this domino effect, this rippling out effect of people not being able to make their obligations because there was a default way down at the genesis of all this all, that then introduces this risk which people don't generally consider when it comes to U.S. debt. Do you see that ever changing? Because if that changes, that's where my mind immediately goes, well, we've just come out of well, maybe we're still in it, some form of banking contagion crisis thing
Yeah.
going on, and you throw this in right when there's a challenger to the US dollar dominance. Well, it's always kind of been there, but right when that's really picking up during a war, where does this go, right? Like, could it ever get there and actually affect us here in New Zealand?
Look, who knows where this leads to for New Zealand? Personally, I don't think it does make a big issue here, make a big difference to us here in New Zealand. I think you have a couple of things, right? It's pretty hard to see them retaining their AAA rating if they do actually default and don't make those payments,
Yeah,
because effectively they've proven that it is not risk free.
that's right. That's right.
Um, what does that mean? That's the bit I don't know, and it's really really hard to see. The problem with the US dollar, and I guess some people claim that this is kind of going to help unset the US dollar from its dominance, from its global dominance. And I personally, I struggle with that theory. US dollar is so entrenched in absolutely everything that happens, and there isn't really an alternative currency out there that can pick up on it, right? No one, Chinese yuan, definitely political influence, political manipulation, euro. A lot of people have been talking about that for a long time, but it's never quite got there because that lurches from crisis to crisis to crisis. Um, and so the problem, so you kind of go, does it make a hell of a difference if they do end up with a credit rating downgrade? I'm not convinced that it does. I think it's a big propaganda coup for Russia and China, but I don't think
Mhm.
it's anything else.
Yeah, well, that's interesting. So, how much of this do you think is really being capitalized, maybe by Russia and China? Well, that's probably beyond the scope of this podcast, but I'm sure there's another layer there as well, isn't there?
Oh, massive. And that's
Yeah.
that's kind of one of the White House's big arguments is saying, well, how can we let this happen? How can we go from this to how can we let this happen? Because at a
Yeah.
time where geopolitical risks are rising and we need to show that we are the rule of law,
Yeah.
and we let shit like this happen. It's truly amazing.
Yeah. And we'll move on from this, but just one more point just to raise here is that we've heard the term come out of New Zealand as well from our central bank, and we've heard it definitely coming out of the US Fed, the fact that they have tools. They have
Yeah.
unlimited tools or levers or mechanisms that can be initiated at a moment's notice. And like my view is that there's an unlimited money printer that can wallpaper over any crack, and the tools are really just a plausible explanation for how you can explain the flow of money, which is really just paper mache. And there's no chance, like as long as they're not willing to let things fall apart, there's just no chance that things could fall apart. Really, is what I'm saying. Is that right?
Uh, yeah, exactly. Well, I mean, the thing about the US system, which is kind of really interesting, is I mean, yeah, the answer is yes. Sorry, you are right in that the US, if push came to shove, could the Federal Reserve go and offer to buy all of those treasuries off the banks and off anyone else that needs them, and then just store them until the government's ready to pay them, potentially. There are definitely tools and levers at their disposal. But fuck, the US political system is just so toxic and so partisan that I just, yeah, I don't think the Fed wants to go there, right? Because the one
Mm,
thing they need to make absolute sure of is that they retain their independence.
that's right. Yeah. Okay. Well, speaking of independence, separation of church and state, well, actually, separation between government and central bank is what we're talking about
Yeah.
here. In New Zealand, we had an OCR, official cash rate announcement, for those of you that are mortgage holders. If you owe money to the bank for your property or investment properties, this is something that we watch. Sometimes I would suggest we watch it a little bit too closely. However, I think right now in this environment, it's an interesting thing to keep an eye on. The official cash rate increases the cost of money effectively through a mechanism. And that's what is said to cure inflation or help in the fight against inflation, because it brings down economic activity so that the rate at which prices go up slows down. Prices don't necessarily fall, but the rate of the increase should hopefully come down as interest rates go up. So last week we had a 0.25, 25 basis point increase on the OCR. And I have a lot of views about this, so I'm just going to try and shut up as much as I can. But do you want to give me a bit of an insight, Rupert, as to how the markets reacted to this OCR increase last week?
Well, I think that so the OCR did go up by 0.25% or 25 basis points. But it's probably the second part of what they said, which was most interesting. They also said, hey, look, we're now at 5.5%. We actually think inflation is largely under control, and we're pretty much done on our tightening cycle, or we believe we are done on the tightening cycle. And I think that's what surprised everyone, because there was a lot of people, market views were split on whether they'd do 25 versus 50. And then the market also, most market, I think consensus had moved up to being 6% being the peak. So the second sentence around 5.5 and done, everyone was like, whoa, 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 this is not what we expected. And what that meant is that the currency reacted. The currency fell pretty sharply. We saw
Mm,
interest rates drop sharply. The 2-year rates dropped sharply. It was extreme. It was just kind of a very different message than anyone had expected, because fundamentally most people and most of the economists have been talking about, hold on, we're getting a new surge of demand, we're getting a new surge of inflation, and people were even worried about the 6% rate, let alone stopping at 5.5.
mm. Do you think they were wrong then? Do you think they made a mistake?
Well, I don't know. Uh, to give Adrian Awesome credit, he's played this. He started slightly too late, no question on it, and he definitely let some of the QE and some of the funding for lending programs run for far too long. But we also need to remember, when he started hiking rates, he was one of the first in the world, and he was also told by everyone, "You shouldn't be hiking rates. This is nuts that you're the only one hiking rates." So I think he's played a pretty good game here. I think if he's right, that's great. If he's wrong, well, the impact could be pretty severe. Hopefully, we get to a world where that he can kind of correct course pretty quickly if he does. But the one thing we do know about monetary policy is it takes a while for it to kick in. There is a significant lag impact. It takes time.
Mm,
And what this is doing is this is just allowing that to happen. So
mm.
I think the analysis that they've run seems pretty sound. And fundamentally, it's kind of, I think he's doing what everyone actually asked him to do 3 months ago, which was give it time, see what happens, and let it all work.
Yeah. I've been probably too critical of the Reserve Bank of New Zealand, I think, and I'm starting to wonder maybe if I've been probably wrong. I might have to send him a letter and just apologize for some of the things I've been saying to him just quietly.
Yeah,
But
do that with an invitation onto Everyday Investor podcast, I think.
yeah, there we go. I'm sure he'll say yes, all is forgiven. But just in case he doesn't, yeah, just in case he's listening, yeah, no, because I kind of thought, like, with you, I totally agree that firstly, they kept rates way too low for too long. They were kept the money printer going even though it wasn't being used effectively for way too long. And then when they rose the rates, in my view, they rose way too fast, way too soon. And yeah, during that period of time, I was kind of just saying, "Hey, no, too much, too soon. Wait, just let's see what happens here," because of what you just said. There's a lag. Uh, turns out that the plateau is where they say the plateau, not where I say it is. And so I think you're right. Like the jury's still out. We kind of have to watch and see what they do. This is why central banks should be independent of political
Yeah.
interference. And there's a question mark there, I think, that should be asked. But if they're stopping now, how far away are we from the election, Rupert?
Wow, an October election. So what's that? It's
Exactly.
another 5 months, 4 or 5
Yeah.
months. And I think,
Yeah.
look, you it was quite interesting, right? Because so Nicola Willis had a big go at Adrian Orr, and I found this pretty appalling, to be honest. It's the first time in New Zealand that I've seen such blatant partisan kind of scaremongering. So the Parliament Select Committee the next day, she was basically implying that that rate decision was a political decision aimed at supporting the Labour Party. And she kind of just kept on drilling down to every single one of his assumptions and asking why, whether they were correct or not. And to me, that's not the role of. I just think that's we haven't seen that kind of partisanship in New Zealand on issues like this so far, and I really hope we don't end up with a political system that does drive that. So his answers were pretty good on some of that stuff, though, Darcy. So as much as we go 4 months out, this was as good an outcome as you could have ever asked for for the Labor Party, for the current politicians in power. But he said when asked how can you say that the budget's not inflationary, he said pretty simply because we're expecting the budget announced spending growth, which was smaller than economic growth. So actually, government spending as a percentage of overall economic GDP is coming down. And you kind of go, that makes quite a lot of sense. He's got a view on immigration, where fundamentally he doesn't necessarily believe that the current surge in immigration is going to be continued. And he also, his answer on immigration was, it actually also what we are seeing, one of the biggest issues in our economy right now is workforce. So if we do have a whole lot of this immigration continuing on through, then that's going to mean that potentially eases a whole lot of the labour issues. So he actually, I think he answered all those questions pretty well. And that's why I said earlier, I think the analysis and the work that they did to get to that, it all feels pretty sound.
Yeah. 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 When like you can't be critical when there's nothing to criticize. So
No,
you just, yeah.
and I think, look, I think it was a little bit of, there was a hope that a budget announced one week, OCR the next week. I think National were probably hoping that it would be a really easy hit, which was which around the lines of, hey, look, Labor have just done this. They've now stoked inflation. That means your mortgage is now higher because of what they've done.
Yeah.
And that clearly
Yeah.
prepared all of their comms and their strategy around that. And unfortunately, we're disappointed.
Yeah. Yeah. So time will tell, right? Like I know I speculated, well, 6 months ago or so that, yeah, you just wait 6 months before the election, you'll see the
Yeah.
foot being taken off of the economy. And I got it wrong. We're 5 months into it, right? But then again, that's assuming that there's interference going on and the jury's still out there. But I would watch this still because I guess the acid test will be whether or not we do get inflation that continues. Because then, well, why did you pause it then here? Right?
Yeah.
So I think there's something to watch here is really what I'd say.
Well, I think the thing for us to watch, it's going to be seeing when do the Fed announce. I think the Fed are 3 or 4 weeks away for their next announcement, and it'll be interesting to see some of the dynamics that they're seeing and what they're talking
Yeah.
about.
Yeah.
Because I think, yeah, it is fundamentally right. This inflation bout has been globally synchronized at the end of the day.
Yeah.
All the same issues, excessive government spending and labour shortages, but that's basically happened everywhere in the world. And
Yeah.
so I'll be curious to see that'll be the thing that gives us that first kind of sign. If they follow the Reserve Bank and they kind of slow it down, then I think, yep, he's there. If they come out and say, hold on a sec, we're seeing a resurgence in inflation, we're seeing this, then clearly he will have got it wrong.
That's right. And I guess what we're asking here is the question that we're really answering here is inflation under control? And that's an ongoing thing. Bringing it back to the household, though, I don't know enough about your personal finances, Rupert, to say this, but I know my own, and I know the clients that I speak to all the time because we work with people on the way up when they're building up, and then we also work with people on the way down when they're trying to consolidate things and save costs. And one of the things I've seen is probably just even in the last month or so, really, has been this general kind of, all right, we've done everything that we can to strip all of our discretionary spending down to the bare minimum. And it almost feels as though most households have given back, I guess, the gains or the windfalls that they received during those COVID years. I don't know if that's true to say that there's nothing left in that pain tank left. There's probably a bit more pain to come still, but it does kind of feel like while we might not be at the end of inflation, we're pretty close to it. Would you generally agree with that?
I Look, the pain tank is high, and everyone you talk to is talking about the pain tank being extremely high, right? So, whether it be a lot of the discretionary spending has come right off, you see even supermarkets, people are trading down brands. There is no question about it. The average Kiwi is under a huge amount of pain right now.
Hmm.
And I think the one thing I've been consistently saying for a long time is it will all come down to the labour market, and I don't know whether that has turned yet. And I think we are seeing. I mean, we've seen shipping costs come down, we've seen commodity costs come down, so we're seeing everything else come down. But is the migration going to sort out the labour market? Because we haven't seen job cuts yet here in New Zealand,
Mhm.
and that's probably my fear is that we continue the wage spiral, and if that continues, then it's going to be really hard to get things under control.
Yeah, agreed. And certainly in the building industry, as we've covered recently, there's
Yeah,
significant increases that have been there, and the only way for that industry to exist in the future is for prices to rise. So we're going to see a definite increase in the cost of building a new home.
yeah,
Medical, that's increasing. Education's increasing. Basically, wherever there's a government fingerprint, just quietly, it seems like there's an increase in costs coming through there too. So I guess the question then that this brings, and maybe we can kind of almost finish on this question: if inflation as a directional thing, like the rate of inflation increasing, if that's plateauing now, hopefully, when do you think we would be able to expect a reduction in interest rates, specifically mortgage rates? Do you have a view on that?
Um, Look, I think it's going to depend entirely on the recession, right? Then when and how does that hit? Um, and I think that's the bit that everyone's a little bit uncertain of now. So initially, everyone's fairly confident we'd have most people thought we'd be in recession by now, to be honest. That continues to get pushed back. I think Treasury have now said maybe not even a recession. And so, yeah, the Reserve Bank is saying Q3 next year is when we're going to start to think about it. There's no way. One thing you do have to give Adrian Orr a lot of credit for is when he says something, he tries his damnedest to stick to it.
He does. Yeah,
So we
totally.
probably are looking at kind of back end of next year,
Yeah,
unless we end up with a pretty severe recession hitting early. And then if we manage to skirt and it is a soft landing and we don't actually go into recession, like you can easily see a world where they don't come down for a very long time.
that's right.
Because if they don't need to drop interest rates to drive further economic growth because we're not in recession, I'd say, given where we are right now, the scenario is probably higher for longer.
Yeah, I don't like that scenario at all, but
No, I
I
don't know what
agree.
does.
Yeah, no, I
I mean,
agree
I'm
though. Like
talking to
that.
someone whose mortgage has become 3 times more expensive over the last 3 months, and that hurts. And
Yeah,
that's the piece that everyday Kiwis are going through as well, right? So
yeah,
none of us want that, but that's unfortunately the world that we're going in, right? And
yeah.
that's almost the ugly world that we're saying. We're saying we don't want a recession,
Yes,
and we don't want the economic downturn, but actually the economic downturn is likely to give us all what we want
I know. Yeah, it's
if
just
we keep
pain.
our jobs through it.
Some of us might not get through it financially, and we might have to give up
Yeah,
ground. But the cool thing with this, and this won't apply homogeneously, of course, some people will be the recipient of this truth and some won't be, is that during these times, if you can hang on, there is this huge, intensely bright light at the end of the tunnel, which is the fact that our official cash rate is now so high that there's so much scope for that to decrease, which
Yep.
then brings in a lot of relief. And so, if we can maintain our footing, if we can work on increasing our income resilience in that area, then when things change, it'll be like night and day, or it'll be like when the rain finally stops, which is really hard to imagine here in Auckland. But when the rain finally stops, it's going to be sunny again, right?
Well, and I think also from an investor's perspective, you've got a playbook now, right?
Yeah.
We know we know how the world reacts to low interest rates. We know what it does to asset values. We know what it does to different asset classes. I don't think the idea of high interest rates is yet priced in, but we now have a playbook. And that's always great when you're an investor to have a playbook that sits there and goes, cool. If I'm expecting interest rates to fall at some point, I'm expecting they're kind of there. We know what to do, right? We know it's going to be the property assets, all of those kind of long-term, the growth assets that will benefit from it. And I think that's the other flip side, right? We've got a playbook, and it's about figuring out when you want to launch that playbook.
That's right. Yeah. A lot of us didn't really want to believe that it was as simple as that, that interest rates go down, assets go up. But I think you're right. That was the big lesson we learned in the last cycle. And we have the halving cycle with Bitcoin coming up, 2024. We have a lot of stuff kind of in the pipeline. AI is going to be bringing a lot of efficiencies, I think, into businesses. So I kind of can see how things are gearing up for quite a big boom time when this eventually does kind of blow over. But hopefully, I'm not being too optimistic, right?
No, I think, look, economic cycles, there is always a rainbow at the end of the cloud. And that's the truth, right? Can you hang in long enough for it? And the other thing about economic cycles is you never know you're at the bottom until you're on the way back up.
That's right.
And that's why it's so hard to time them, because who knows when everything bounces back.
That's right. Yeah. So good. All right. Thank you for that one. That was a good discussion, Rupert. And
Okay,
next
thanks,
week,
Dustin.
yeah,
And
let's
look, been a lot happening in AI over the last couple of weeks, and so I'd love to maybe next week let's do a bit of an episode. There's been some great research out on what AI does to Apple, what it does to Microsoft, what it does to a lot of those companies, and we
yes,
also saw Nvidia with their kind of presentation and their results last week. So I think maybe we need to do an AI impact, and what does that do for the stock market, and why has it done what it's done so far next week.
Yeah, and again, a reminder to ask a question. Anyone, if you have a question, this episode, believe it or not, I forgot to tell you about this, Rupert. I told you, hey, we should really talk about this, but Ryan wrote in and he wanted to hear us talk about the U.S. banking situation and how it might impact us here in New Zealand. So yeah, if there's anybody else that has questions like that, there's a link in the show notes that you can click on to ask us a question or just find out how to get in contact with us. We'd love to have your input. Awesome.
Awesome.
Thanks, Rupert.
Okay.
We'll see you next week.
Thanks, Darcy. And we'll speak next week.
All right.